Before I begin, I do want to share an interesting article, an article of inspiration that I came across here this morning. And the headline is, Viking Cruise Ships Bet on the Future, Announcing New Ship to Sail in 2022. Think about that for a second. An industry that has been hit like no other during this virus. An industry that will probably take about a year or two to get back on its feet. And yet they're betting on the future and still producing these ships. You see, we're in such a blessed industry that when things get back up and running, whether it be a week, 2 weeks, 3 weeks, or whether it be 6 weeks, we're going to be back up and running right away. So it's important for us to kind of get into that right mindset. And I just found that article so interesting, and I wanted to share it with each of you here today. Okay, let's get to it. I have about 6 or 7 topics that I want to cover with you that I happen to believe is instrumental in your business and functioning as a real estate agent. So the first topic is overall lending. What's closing, what's not closing? And if we start from the top, we have conventional financing. Conventional financing is probably about 65 to 70% of the marketplace. And the good news with that is that loan, those type of loans are being funded, and there's no issues there whatsoever for the most part. So as an agent, you really shouldn't see any issues with conventional financing, whether you're on the buy side or the list side. I also wrote down FHA financing. Again, another government-backed or government-subsidized loan. That loan is still functioning, funding. You shouldn't see any issues there, but I'm going to touch on something important a little bit later on as it relates to FHA. But again, a product that is still happening. I wrote down VA financing. VA financing, okay, is still happening as well. You know, let's salute the veterans, of course. They earn it, they deserve it. Those loans are fully operational and funding as well. I also wrote down jumbo financing, okay? Some turbulence in the jumbo market. What is jumbo financing first and foremost? It's loan amounts in excess of $510,000 to keep the numbers simple. Loan amounts that are in excess of $510,000 here in Palm Beach County, okay? Now, why do I say a little bit of turbulence? Some investors have pulled out in its entirety. In other words, they're saying, we're going to go ahead and hold off. But still, some of the major players are funding, which means jumbo financing can be had. Some requirements and heavier restrictions are coming about. So we have to, of course, be very mindful, particularly when they're getting pre-approved, to make sure that they're being pre-approved the right way to ensure success in the transaction. Then I wrote down non-QM. So first of all, what is non-QM? And non-QM is non-qualified mortgage. What's a non-qualified mortgage? Okay, these are mortgages that came into the space about 6 or 7 years ago, roughly. These are instruments, mortgage notes, that basically have come into the marketplace, allowing for borrowers to not use tax returns for income and use bank statements for income. So it was really designed for a self-employed person that, well, we'll say has had some tax advantages and perhaps didn't produce enough income on their tax return, but yet can show bank deposits, and the lender was allowed to use that as income. That's a non-QM loan. Another example of a non-QM loan is a loan that, let's say, a person had a foreclosure 6 months ago, a year ago, or 2 years ago. While normal traditional lending says, nope, we're not going to do it, non-QM would step in and fund that transaction. So where do the non-QM markets sit today, and where are all those loans? They're gone. They've left the building. There are no non-QM investors left in the space. So if you have a transaction that you're working with, let's say on a buy side or a list side, what should you do? Should you just send a cancellation? Should you give up? Here's my thought. Absolutely not. Why do I say that? Well, I was referred to transactions just last week that were both non-QM transactions that were about to get declined. Here's what we did carefully. We called the borrowers, and of course, they're in a lot of stress at this point, and we asked them the right questions. And the questions were the following. Do you have any family members, mom, aunt, uncle, anyone that could be perhaps added to the loan application to add income to the application so we now have income and we don't need a non-QM loan? Now is the time where loan officers, and many of them are not, unfortunately, have to get really, really crafty and think outside the box to try to salvage transactions for you wonderful real estate agents. And that's what we're doing. We're grinding every angle to make sure we can try and find an angle. So non-QM is gone. What do? We have to ask the right questions to see if we can figure out another alternative solution. Okay, I wrote down here, FHA major change. Okay, I happen to believe single-handedly the lenders that have chosen to increase their credit score requirement as it relates to FHA has probably had a ripple effect across the nation like no other. And let me explain. Let's first and foremost understand that FHA did not raise its credit score requirement, period. So for someone who wants to put down 3.5%, the credit score requirement is 580. For someone who wants to put down 10% or more, the credit score requirement is 500. But here's what happened. Many lenders, many household names, lenders that you know of, local here in nature and across the nation, have chosen to increase their personal requirement because they felt that there's much risk in that type of lending. So what did they do? They said, you know what, we'll still do an FHA loan, but we want a 680 credit score. Or you know what, we'll still do an FHA loan and we want a 660 credit score. Well, folks, here's the deal. That cuts out a huge segment of the buying market. And on top of it, most agents and most buyers think it's an FHA rule, and so they end up sending cancellations over and walking away from the transaction when it is not. We at CrossCountry Mortgage, we did not raise our credit score requirement. Just last week alone, on Friday, we were referred 3 transactions from 3 different real estate agents that died at the table, and we are resuscitating those transactions. Agents, this is really, really big. Don't fall victim to it. Okay, appraisal process I wrote down. What's happening with the appraisal process? All right, here's the good news. Conventional financing, FHA, and VA have now all agreed to allow appraisers to do what's called an exterior appraisal, meaning drive-by appraisals. They don't need access to the property. And in some cases, when we run the loans through the automated underwriting systems, sometimes it can come back not needing an appraisal at all, which is called an appraisal waiver. This is really big. It's big on multiple fronts. Number one, it's less cost to the buyer. Number two, it's so much more efficient to all of our time. They don't need access to the property. And the appraiser is really going to go off of the data in the MLS and a lot of the photos. If some house is upgraded really, really nicely, the appraiser is probably going to reach out to you and ask you for additional photos and additional information. So do us all a favor in the industry and work closely with the appraisers, because it's going to be important to streamline that process. Okay, employment. What's going on with employment, considering the fact that most people are not working today? How is lending addressing that? And this is a big one, a real big one. Okay, so I can speak on behalf of CrossCountry Mortgage. I cannot speak on behalf of the overall industry because I feel that the overall industry has taken some conservative measures. Here's the good news. If someone is currently employed and they remain employed and they're currently getting paid, the question becomes, how does a lender validate their employment information? They're closed. The good news is with us is we can validate that simply by a direct deposit, the most recent, and a pay stub. So we can work around that. The employer doesn't have to be open. The second piece of information, which is huge, and I really need you to pay attention on this. Are you ready? Let's assume that they're employed, but they're currently not getting paid. We at CrossCountry will allow the employer to validate that they are gainfully employed and they will receive compensation once they restart in their position. So we're allowing that, and we're going to be able to close that transaction. Folks, I can't tell you every lender is going to do that. That's a stance that CrossCountry took. It's a well-positioned organization, which is why I'm here, and it's something that can give our agents a huge competitive advantage in today's marketplace. So think about that. The other topic I wrote down here is mortgage rates. Okay, so here's the deal. Mortgage rates overall are amazing. Interest rates are in the low to mid threes on 30-year money, high to mid twos depending on product for 15-year money. They're very volatile. They're going up and down. They're swinging all around within 0.25%. But it's okay, because the truth of the matter is that overall rates are doing fantastic. And so for those buyers and sellers that are paying attention, they really have a ripe opportunity to take advantage of today's marketplace. I was talking to a wonderful agent the other day, and I said, you know what's so interesting? Usually when you see an economic challenge or a crisis, usually it's the big guys, the fat cats on Wall Street that can take advantage of this, not little guys like myself. But in this environment today, because of interest rates being so low, we can all take advantage and give ourselves some economic relief in taking advantage of that. So think about that. That can be spread, that message should be spread to all of our consumers and buyers, something that's really important. The good news for us being in the business is that it's a reasonable assumption to understand that interest rates are going to remain low for the foreseeable future, which we all know the cost of money ties into home sales. So it's an exciting time, and it's going to be an exciting time for us for months and months and perhaps a year or 2 years to come. So think of it that way. Okay, closing timeframes, another important topic. Well, whether it's Bank of America, and this isn't to call out any big shops, whether it's Wells Fargo or the big shops, or whether it's the local lender here that many of you are aware of, I have to tell you, all of their timeframes have elongated. Why is that? They have an influx of refinance business. They have an influx of staffing issues. There's a lot going on in the marketplace. So they're not necessarily as staffed for this type of volume and for this type of business to be able to maneuver and to be nimble. Where are we at the Matt Weaver team at CrossCountry? Folks, I know this is going to sound like a quick 30-second commercial, but I really want you to hear this. The advantage that I have and the advantage that we have with our team is very simple. I have a wonderful team of 32, which is all designed for each member to be at their highest and best use. It consists of our underwriters, closers, processors, etc. What does that mean? That means we're nimble. That means that we have the ability to execute faster than virtually anyone in the industry, which can give you a huge competitive advantage. Our time frames remain the same. Our pre-approval process remains the same. The interesting part is that we staffed up a few weeks before this happened. We sensed some market volatility in terms of interest rates, and so we reacted accordingly. We have a refinance channel that is built out separate from our purchase channel, so it doesn't coincide, it doesn't bog us down. Our purchase business, meaning you as agents, is our #1 priority. And as far as I'm concerned, as far as I'm a leader, will always be my #1 priority, period, end of story. So those type of advantages we have in today's marketplace, and our timeframes remain the same. But you're going to see a lot of delays out there with other mortgage lenders, which is normal, and it's not necessarily to knock them. So think about that. Lastly, I wrote down opportunities. What type of opportunities do we have? Well, I put here for listing agents. You know, I came up with the 5-step simple process as to what agents can do in today's marketplace in terms of having a conversation with a seller in terms of, does it make sense to sell today? What do I mean by that? We call it the ideal home exercise, and here's what I mean. I would say to a seller, if you're not in your ideal home, and what is ideal? Meaning if you're not there or you don't plan on being there for the next 24 to 36 months, now is the time to consider to sell high and borrow low. Let me repeat that. Sell high and borrow low. So of course a seller might say, well, if I sell high, then I'm going to buy high. Well, not necessarily. If you sell high, great. If you buy at the same market value, remember the cost of money, meaning interest rates, has an overall impact of the cost of the home. So you're paying less in cost overall. That's the concept. Sell high, borrow low. The 5-step simple exercise walks them through that process. If you'd like, I'll send you the video, and you can have that conversation right over the phone. So you can see if it makes sense for them, because folks, 60% of homeowners today are not in their ideal home. Just ask them the question. I also wrote down for buy-side agents, what opportunity do we have today? Well, Think about this. How many sellers today are afraid? How many homes today are vacant? How many of those sellers want to sell immediately? If you take advantage of the Matt Weaver team system, we can put you in a position to close a transaction in 10 days, 14 days, 15 days, 21 days, where other lenders cannot. So that type of value, that type of strength in offer to a seller can perhaps put your buyer at a significant advantage and perhaps get a significant discount on pricing. Or think about it this way. Sellers right now would probably love to accommodate seller closing cost concession. So, Mr. and Mrs. Seller, I see your house is vacant. If we can put a deal together and close in 15 days, would you help my buyer and contribute $3,000, $4,000, $5,000, $6,000, $7,000 worth of closing costs? Think about that advantage that we can take in today's marketplace. And lastly, for both list side and buy side, I know you can't refer everyone to us, and I understand that. Some people have their own relationships. Sometimes you're on the list side and so on. But I compiled the top 10 questions that first and foremost, every listing agent should ask the lender before accepting an offer in today's marketplace. Absolutely imperative before having your seller sign. If you'd like that, just shoot us an email. I'll have it out to you in seconds. But those same questions apply as it relates to buyers, okay? So go ahead and email us, send us a text message, call me, you know my direct number, and I'll send out to you those top 10 questions. If you have any other questions, always feel free to reach out to us. You know, we're 7 days a week, 8 a.m. to 9 p.m. I hope you found today's message of value. Together in success.